ratio between 6 years and 18 years is, of course, 3 to 1. So whenever you have a cycle of any length, you will expect to find harmonic echoes of 2 to 1 and 3 to 1 ratios of that particular cycle. So therefore, if there's an 18-year cycle, it is very likely that you will find echoes both in terms of longer cycles, 54-year cycles, 3 to 1 ratio, and shorter cycles, 6-year cycles. So you will find echoes of those cycles present in the data. When you, I see a question from Mark, and I'll get there in a moment. When you perform any form of spectral analysis, which of course Sentient Trader does at the beginning of its an analysis process, then spectral analysis will reveal not only the cycles, but also the echoes of those cycles at multiple harmonic ratios. So you will often find a bit of an echo at the 6-year level. The other reason why you get an echo of a 6-year cycle is that, of course, we have an 18-month cycle. Okay, and 18 months times 4, or a harmonic ratio of 4 to 1, 18 months times 4 is also 6 years, of course. A year and a half times 4 is 6 years. So we get echoes at the 6-year mark, if you like, from both the 18-year cycle and also from the 18-month cycle. So I believe personally, and it's just a personal opinion, but I believe that there isn't actually a 6-year cycle in financial markets. But I believe that we do sometimes see a 6-year echo, okay, from the 18-year cycle and from the 18-month cycle. And I believe that there's a very good chance that this big cycle, let me just clear this screenshot, I think there's a very good chance that this cycle that we see here, from 2002, 2003 to 2009, is in fact a 6-year echo. Okay, because that is roughly 6 years. So I think that we are seeing the echo of that cycle. And as Steve points out, in some trader chats, I'm working with charts that have 6 years over there. Okay, and they will actually position the 6-year cycle over there. And in some trader chats I don't. I work with analyses that leave the 6-year cycle out. The reason for that is because I believe that it's important to keep an eye on several analyses. And as I've mentioned so often before, it's important to keep an eye on several analyses, particularly if you are creating custom nominal models. If you create a custom nominal model, I would strongly encourage you to create another chart that has the default nominal model, because very often the default nominal model at the end of the day turns out to have worked out pretty well. And so I always do that. I have multiple workspaces, of course, and I do all kinds of things. But that's in answer to Steve's question. So what do I believe is happening, Steve? In terms of what I believe is going to be happening towards the end of this year. So in other words, for the next 6 months, for instance, I believe it's perfectly adequate to work with the analysis that I'm showing you today. I think that the whole potential of a 6-year cycle, and whether or not that 6-year cycle is coming into play, I think that's a question that I might come back to later on this year. I do keep an eye on both of these analyses, and they play out very, very similarly. The only differences are, of course, that there's a 6-year cycle in there, and so that has implications in terms of what we're expecting sort of right towards the end of this year, early next year. How strong will the bounce be out of the trough that we're expecting at the end of this year? Much sort of bigger questions than I'm planning to speak about in today's Trader Chat. So I hope that answers your question. I think it's very important to keep an eye on several analyses. Okay, I have my that's no problem. I have my personal favorites, but I also, to be honest, I feel a bit of a responsibility to also present to you an official Hurst picture. I don't think I should be shoving my own personal analysis down your throats. My own personal analysis prefers the 6-year cycle at the moment, but strictly speaking, the Hurst analysis that most people would accept does not include a 6-year cycle, which is why in today's Trader Chat on it out. I notice Mark asks, what is the best nominal model for forex? Well, with a bit of luck, we will get to take a look at a forex chart a little bit later, and so I can speak a little bit more about that. Mark, I believe that Hurst's default nominal model works best for forex, and I use the default nominal model for all my forex analysis. The only thing I do differently in forex is I use a different nominal model when we get intraday, and in fact, I think that this workspace which I created this morning might have that model. If I have a look at it, yes, it does. Okay, great. So we can look at that later. This is in fact the nominal model, and I'll show it to you. This is the nominal model I believe works best for forex. Nominal model. This is on the 5-minute chart, and the only difference that I do on the 5-minute chart for forex is you will see it here. It'll be very quick and easy to show you. Here it is here. 160 minutes. Next shorter cycle, 80 minutes, not 60. If you look at the default nominal model you have on a 5-minute chart or a 10-minute chart, you will notice it goes 160 down to 60 at a 3-to-1 ratio. For forex, I prefer a 2-to-1 ratio, and I go down to 80 minutes. I then go down to 40 minutes, also 2-to-1, and so on. I then go from 40 minutes down to 20 minutes, and that's the shorter cycle. So Mark, that's my personal favorite, but that's just what I think works. By all means, I think that you should probably stick initially with the default nominal model, because that's the one that we found after testing worked best on most markets. But personally, I prefer this one, the 80-minute nominal model over there. Whether it works better is up for debate. I think they work very similarly, but I find it easier trading and making intraday trading decisions with harmonic ratios of 2-to-1 as opposed to harmonic ratios of 3-to-1. I find that harmonic ratio of 3-to-1 really just bothers me every time I get down there. Okay, fine. So yeah, I did probably rush through that in the video. Okay, so let's go back to what I was going to try and talk about, which is the what I think is happening for the longer term. And I want numbers. I love numbers. Perhaps I'm odd. I'm one of those weirdos who enjoyed mathematics at school, so I really enjoy numbers. So I thought I would throw around a few numbers, and I will show you what Sentient Trader is doing behind the scenes, and something that you're probably not even aware it's doing, that has to do with cycle shapes. And I am going to come back to that question about the cycle shapes of the 5-hour cycle, because that's a very, very interesting question. Okay, so let's talk about the cycle shapes. I've zoomed in, as you can see, on the market action since March of 2009 right up to today. In fact, I'm receiving live streaming data. So as we speak, these charts are updating. Not that it's going to make any difference to my daily chart, but so let's take a look at these cycle shapes, and I want to show you some of the numbers for these cycle shapes, and explain to you what Sentient Trader does behind the scenes, but something that I think is really useful for you to calculate. Okay, so according to this analysis, we had a trough of the 54-month cycle in March of 2009. Okay. So what's happened since then? We have seen, as you can see, 2 full 18-month cycles, and we're now in the third 18-month cycle, okay, which, as I mentioned, is turning down to its trough. Okay, and so now let's take a look at the cycle shapes and see what they mean to us. Okay, at its most simple level, a cycle shape starts with a trough, goes up to a peak, and then comes down to another trough. Okay, so at its most simplistic level, that is the first 18-month cycle shape that I've just drawn there. Okay, that might not mean much to you, but you should be getting used to the whole cycle shape thing. Goodness knows I go on about it enough, and you should be able to very quickly tell me that that's a bullish cycle shape. Why? Because of two things. Because the peak is late, in other words, it occurs after the halfway mark. That's the first thing. And the second thing is that the closing trough, the final trough of that cycle, occurred higher than the starting trough, which was way down here in March of 2009. So that was a bullish cycle shape. Okay? Let's take a look at the next 18-month cycle and draw the cycle shape there. Again, simplifying it. That is the cycle shape of that cycle. Okay, you'll agree. It's very simple. Is that a bullish or a bearish cycle shape? That, I would say, looking at it, is a very slightly bullish cycle shape. Okay, but only slightly bullish. Why? Because again, the peak occurs slightly late, slightly after the halfway mark, and secondly, the trough is occurring a little bit above the first trough. Okay, so it's a slightly bullish shape. Now, before we start speaking about the current cycle, let's speak about something else. I spoke about those cycle shapes, and I said, oh, this one's bullish. Okay. This one over here, the first one is bullish, and the second one is slightly bullish or less bullish. It's all very well us speaking to each other in those sort of terms, but Sentient Trader, which is a software application, needs to have it in numbers. So when I built Sentient Trader, I had to find a way of defining the cycle shape. And Sentient Trader does this behind the scenes. It defines the cycle shapes for you, and or at least for itself. And so I thought that I would show you today how it defines those cycle shapes and throw around some numbers, because I love talking about numbers. And so here they are. Now, this is an Excel spreadsheet that I set up quickly so that we could actually really talk about these cycle shapes, and we could analyze the cycle shapes. And I could show you some very interesting things that happen with cycle shapes. First of all, you'll see this left-hand column over here is colored yellow. Okay, so this column is presenting cycle shape calculations for the 18-month cycle. I thought I'd keep the color coding consistent. Okay, that's the 18-month cycle, and you'll see that I have 3 separate blocks here. That is the first 18-month cycle since the 2009 trough. That's the second 18-month cycle. And this is the third 18-month cycle. Don't worry, I'm going to explain to you all about this spreadsheet and how it works. But the important thing is that what I have done here is I have calculated the bullishness of each cycle shape. Okay, so I've done exactly what we did a moment ago on the screen in terms of saying, is that bullish or isn't it bullish? But I have calculated actual numbers. Okay, so and those numbers are presented here in this row where it says score. So the first 18-month cycle that I just showed you on the chart, which I said, I don't know why I wrote 18. Presumably I'm trying to say 18-month. Okay, first 18-month cycle. The first 18-month cycle, I said, had a bullish shape. Why? Because it had a late peak and it had a higher trough. But how bullish is bullish? Okay, using this little method, and if you're really interested in numbers, I'll explain the calculation to you. But using